What up, family? All right, guys, Sunday Q&A. Appreciate all the questions, guys. Going to answer every single one of these, and if I can't answer it in this video, I'm going to put together a lesson for you guys. So why don't we start running through them now. Alma and Fa, as far as do you have any new updates on how to prep your charts? I'm going to upload a video for you guys tonight in the members area, so make sure you keep an eye on the members area tonight. I'm going to upload a lesson on how to prep your charts. All right, as far as, starting with bigger time frames, working down, how to identify key levels, entry points, all that good stuff. So keep an eye on a video tonight to answer all those questions. Now, Shay, on breakouts, do you always wait for it to pull back some, once it's broken out, or do you just go ahead and let it fly once you think the breakout is confirmed? And, I took some notes here, guys. Shaylon, a big factor for that question is the resistance level on the breakout itself. Meaning, are you taking a breakout over a really short-term, kind of not as important level of resistance, like say a pre-market high, or is it a breakout over a major level of resistance, such as Netflix this week, where Netflix on Monday, as you guys know, breaks above this, 385, 390 level for the first time in about 2.5 years, right? And that is not Netflix. All right, so this daily breakout right here, I would consider that a major breakout. It's a level the stock has not broken above in the past 2.5 years. On top of that, it's a level where we can see clearly the bears go to work. So to me, that's a major breakout. Typically, man, on a major breakout, the stock isn't necessarily going to look back and fade and be as choppy as, say, a breakout above the pre-market high on a Monday morning. So to answer that question, right, it tends to really depend on the breakout itself. Now, me personally, I'm not so much a fan of breakout trades, and that's why I really, like the squeeze setup, and we'll take this move on Netflix this week, right? My preferred way of getting into these big moves is to wait for the stock to consolidate, to go into a squeeze, and then, rather than trying to have to mess around and fight for that breakout position, I like to take the position inside the squeeze. That's what I did here Tuesday morning, I believe it was, on Netflix, inside the 30-minute squeeze. I'm buying my calls somewhere down here, not having to mess with that breakout. And you can see it broke out, it faded, it made a move, it came back in. That can be frustrating, it can be tough to deal with. That's a benefit of buying inside the squeeze. I get those calls. I don't got to try to play for the breakout. And if this thing fires like it does, you're already up pretty once the thing actually starts moving. So as far as the breakouts go, it depends on the level itself. But you can avoid a lot of those troubles by focusing on something, like the squeeze. All right, a few more questions. Kim says, how do you journal your trades? So that's a good timed question, guys. You can head to the members area and click on the daily report card. There's also going to be a video down here showing you guys how to fill out a daily report card, the importance of it, the value behind it, and you can use the template that I provided with you guys. You can download that and start doing your daily journal on your own. It's a really important, habit and discipline for a trader to have, and it's something I want to start seeing every one of the Focus Trades group doing, even outside of the TDG. So check that out, Kim. That'll answer those questions for you, my man. Chandler asked, what have you learned most about options premiums from your experience with selling them? How has that translated over into being a better buyer of options, and how do you cope with your young brother being a savage? So I'm still learning how to cope with that. It's an everyday thing. There's easy days, there's tough days. That's a work in progress. Learning how to cope with that. Not an easy task. As far as, what have I learned about options premiums, from all my experience in selling them, I learned a lot, man. I guess to summarize, I would say, especially with the out-the-money options, guys, they're volatile. As a general statement, options lose value way easier than they gain value. So what that has taught me about buying options naked and, and trading them directionally, you have to understand the volatility that you're jumping into. They're going to bounce all over the place. What has really changed as far as my mindset with buying options is that you got to accept zero. After watching and profiting from, how quickly options can lose value, I've learned that, man, if I'm going to hold these things naked, I've got to really be prepared for these things going all over the place. So that whole, accept zero mentality is big time. And a lot of that has come from my, experience selling somebody else those out the money options and, pocketing all that money while they're getting burned. That's one of the things I've learned, you know what I mean? T Treasury, what is your definitive mental checklist that has to be fulfilled in order to enter a position? So let's look at this pre-trade checklist right here. You know, these are a few things I ask myself before any given trade. And really the only question that leads to, you know, a subset of other questions, is this an A+ opportunity? Right? When we take a position, guys, you're putting your hard-earned money in that shit. Is this an A+ opportunity? So for me to figure that out, these are the questions I ask. Is the market direction supportive of this trade? Example, you're looking for a breakout to the upside on Apple. Well, are the SPY and the Qs showing you strength? Are they showing you momentum to the upside? Are they breaking above a key level of resistance? When we take a stock, guys, we want to be, you know, trying to trade it in the same direction of the market itself. It's always going to be much easier to do it that way. So I ask myself, is the market direction supportive of this trade? Then what about other names in this sector? If I'm looking for a breakout on Bank of America, not only is it important that the market is strong, but what about the other financial stocks? Goldman Sachs, JP Morgan, Morgan Stanley. That's an important question. And then are the leading names supportive of this trade? Again, you're looking for a breakout on, say, Shopify. It's important to know, guys, is Amazon and Apple and Netflix and Nvidia and Google and Tesla, right, the biggest names in the game, those market-leading stocks, are they moving forward today? And again, this all goes back to supply and demand. Is big money buying today? We want to go long, regardless of the stock or the setup, on the days where big money is just buying everything. So is the market direction supportive? Are the names in the sector supportive? Are the leading names in the market supportive? Does the trade offer good risk reward? And that's subjective, right? Some of my spreads, guys, the risk reward is 10-1. On some of the squeezes, you know, they're 1-3. So that's subjective, but obviously that's something you want to ask yourself. Is it even worth taking this trade? If this trade works, am I getting a good bang for my buck? Is it even worth putting the risk out there? And then most importantly, can I fully accept the risk on this trade? And if I'm going to buy $2,000 of Nvidia calls, am I okay with seeing myself losing $2,000? Are you okay with that full risk? If that thing goes to zero, are you going to be mentally and emotionally okay? More importantly, what's the impact going to be on your overall account? Answer those kinds of questions before a trade. Most importantly, if you do so, you'll find yourself, you know, avoiding taking a lot of subpar opportunities. And as far as, you know, what is the best and simplest way to manage risk, you want to think about your whole account, right? Our trading, guys, on a day-to-day basis, a week-to-week, month-to-month, year-to-year, it's never about one trade. It's about the account itself. So really, one trade should not make your account, but more importantly, one trade should not break your account. So when it comes to risk management, guys, you can figure out stop losses, you know, take them off at 20%. You can figure all those things off. End of the day, what matters most is that as you're managing risk, right, and you're taking positions, you're cutting profits, you're cutting losses, on all your individual trades, what matters most is what is the impact of this decision on my overall account, right? If you've got a $1,000 account and you put $400 into a call trade, you don't want to let that thing go to zero, because that's going to have a very negative impact on the overall account. If you've got a $1,000 account and you bought $100 worth of S&P puts, it's not as big of a deal. And again, guys, risk levels, you know, risk tolerance, it's all different, it's all relative, but that is the best way to manage risk. Don't put so much energy into, you know, one given trade having to work, not working. What's the impact on the overall account? It's not a big deal if an options trade goes to zero. It's a big deal if that trade goes to zero and it causes some damage to the overall account. So begin to think that way, right? You've got your account. How do all your different trades, as far as taking profits, cutting losses, all those good things, how are they going to impact the overall account? Your goal is to protect and slowly grow the account itself. It ain't about every individual trade. It's about how do these trades fit into, your goal of protecting the account, protecting previous profits, and slowly moving the ball forward. So manage your whole account. Think of it that way. It's my biggest suggestion. And what would I say is generally the most effective option strategy in providing fair profits and minimizing losses? As far as a setup goes, I would say the squeeze. Reason being that squeezes when they break can lead to big moves, but more importantly, if you trade them correctly, you're getting options at their cheapest. So you're minimizing your risk because you're buying options at their cheapest, but you're also buying them inside of a setup that can lead to some really, outstanding returns. It's a pretty good combination. Aside from, that one individual setup, I would say as far as strategies go, option selling strategies are always going to be the best way to minimize losses simply because they're higher probability. So if you want to learn more about those, you can go to the members area, hit that option selling strategies tab, and you can see all the videos there on credit spreads. And as far as calculating a target profit and a stop loss, again, as far as the stop loss discussion goes, that's my mindset, right? If this thing goes to zero, is it going to damage my account? If it does, I'm going to manage it differently than, if that thing goes to zero and it's going to have basically no impact on the account. So as far as stop losses go, again, it all goes back to what's this going to do to the overall account. As far as target prices go, right, there's a few different ways you could go about that. A few ways I would suggest is, one, if you're day trading, right, you can look for a breakout and for the stock to move to a previous level of resistance. Chandler, guys, in the TDG, you look at a lot of, the stuff he does with the team on a daily basis. That's kind of how he zones up his charts and he takes his day trades and his scalps. He's looking for a move from one key technical level to another. And, for day trading and scalping, that has turned out to be, incredibly accurate. Just trading names, guys, from one key level of support and resistance to the next on an intraday time frame has really worked outstandingly for these guys. Another thing you could do is use the ATR indicator, which is the average true range. Right, and you got that over here in Thinkorswim. You can go on the YouTube. There's a lesson on there I put up on how to add this to your Thinkorswim. But ATR is an indicator that tells us, on average, how much has this stock moved up or down over the past 14 days. So AMD, for example, last 14 days, on average, it's moving about $3 per day. So say AMD opens up flat, right? It breaks above a level of resistance. You're looking for about $2 to $3, of a move to the upside or downside at best, right? That's what the stock has been doing on average. You don't necessarily want to hold on or need to hold on for anything more than that. If you take a breakout trade on Roku, the average move right now is about $9. If it's up $5, once the breakout happens and you go jumping in, you're looking for another $2, $3, $4, right? That's about it. So using that average true range, it tells you how much a stock has been moving on average, and that can help you, kind of dictate where to lock gains, where to take losses, things of that nature. It really kind of gets you in tune with how exactly is this stock individually moving up and down, as it follows the market. So ATR, that's a really helpful one. And let's get back over here. Kevin, when using the TTM squeeze to locate the best setups, how do you determine the best ones to try? Also, how do you determine if they will fire to the upside or downside? So as far as, locating the best squeezes, the simplest way to go about that is when you have the scan, if you're using the scan we gave you guys, make sure that you're sorting by market cap. Right? You want to sort by market cap in this column with the biggest companies at the top. And remember, guys, our job as small traders is to follow the big money, right? And when we look at the squeezes here on the hourly chart, and we rank it by market cap, there's way more big money jumping in and out of Nike and Costco and Verizon and J&J than there is Lyft, right, and Pool and Tractor Supply. Not to say that you can't catch squeezes on these names, but the bigger the market cap, guys, is a general statement, the more the big money is in and out of those names, that can lead to bigger moves. And more importantly, most times, the bigger the market cap, the better the options liquidity. It's a general statement. We all trade options in here. So we're looking for squeezes we can trade options on. You start looking at things like Pool and Carnival, etc. The options are dirt cheap. They got shitty spreads. There's not much volume. So I like to focus on the bigger names. But aside from that, man, we tend to focus on the same list of names every week. The big market leaders: Apple, Amazon, Netflix, Nvidia, Facebook, Google, Tesla, Roku, Shop. Those big leading names, Netflix, that are leading the market, that are favorites of the big whales on Wall Street. You can just look for squeezes in those names, right? But really, guys, with both answers there, it kind of comes back to the same thing. We're trying to follow the big money, right? We want to be fishing where they're fishing. They're going to be fishing way more in something like Costco, Nike, Wells Fargo than they will be in something like Liberty Global, in Sun Communities, whatever the hell those may be. So focus on those big names. That would be my suggestion. And as far as determining if they're going to fire to the upside or the downside, two things come into equation. We'll take that Netflix 30-minute squeeze, for example. And this example, guys, applies to every squeeze we saw this week. Apple, Nvidia, Tesla, etc. Right, so you got this 30-minute squeeze here on Netflix, trying to figure out which way is this likely to move to the upside. Now, we have to understand it can easily go both ways, but we're trying to get a sense of which way is it likely going to fire. The first thing I look at is overall market direction. So we're thinking about getting into this squeeze right on the 14th. What's the market been doing the past few days? All right. We look at the 14th here, guys. Well, as a general statement, the market's been strong for about a week. Right. So the market clearly has momentum towards the upside. Right. That's positive. The market's moving forward. Netflix is probably going to, reap the rewards of that. And then for the stock itself, clearly it's been making a big move. And, this is a special example where, as we mentioned, this thing broke above that major level of 385, 390. So clearly there was a shift in momentum to the upside. So, I'm thinking that this kind of squeeze is going to fire to the upside because the market at the current state is strong. Netflix is strong, just breaking above a major level of resistance, right? A lot of momentum towards the upside. As far as the indicator itself goes, guys, TTM squeeze. If you're going to use a TTM squeeze, red dots mean it's in a squeeze. When the light blue bars begin to show up, that tells you that the momentum is, leaning towards the upside. And when the dots go green, the squeeze is firing. So just visually, right, it's squeezing, it's squeezing, it's squeezing. All of a sudden, these blue bars start coming in. And I can give you guys a better example of something that squeezed a little bit longer, like the hourly squeeze in Apple, right? This was, I think, almost a 200% return. And let's pull that one up so you guys can check that one out. And Thinkorswim's freezing on me, but that's how you can use the squeeze itself. Oh, looks like we're back in action here. So let's get Apple up. All right, she's lagging on me, but I would go look at a few other squeezes with the TTM indicator up, and you'll just visually see, what we're talking about there. But more importantly than the indicator, to me, is market direction, as well as overall momentum of the market itself, as well as that given stock. Kim, after you see a squeeze on the major intraday time frames, such as the hour and the 4-hour, are you looking to enter in those time frames or off of smaller intraday time frames? Good question. So whatever given time frame the squeeze is on, I'm looking to trade it on that time frame. Meaning, if the stock is squeezing on the 30-minute, that's the chart I'm going to use to take my entry. I won't, go try to find, okay, we're in a 30-minute squeeze, so I'm going to try to get an entry on the 5-minute chart. You could, but again, with my mindset on squeezes, once I see the squeeze, if I think it's going to move either which way, I'm just taking the position inside the squeeze. So if it's an hourly squeeze, I'm buying it inside that hourly squeeze, and in that situation, it doesn't so much matter what's going on in the lower time frames. And Kim, you can look at squeezes in smaller time frames. I do every now and then, but those are more for very quick day trade opportunities, maybe even scalps, right? Like a 5-minute chart, a 15-minute chart. You're looking for those things to fire for 15, 20 minutes at best. As far as bigger squeezes, like a daily or weekly, they're absolutely worth checking up on. And to be honest with you, my biggest profits, if you just look at dollar-wise, have come from daily squeezes. But like you said, the bigger the time frame, it can take some time to squeeze. So they're definitely worth checking up on, but you just need to give them time, right? If it's a daily squeeze, you might want to give that thing 30 to 60 days till expiration. If it's a weekly squeeze, you might want to give it 60 to 90, maybe a bit more days till expiration, right? You got to give them time to eventually fire. And as far as how long it took me to become a profitable trader, I would say 5 years. 5 years to become consistently profitable. Consistently profitable meaning that regardless of market environment, I can show up on Monday and walk away on Friday most weeks with money in my pocket, right? Not just in a good market, in all environments. And could I share on my trading journey? we'll save that for a video for another day. That'll be a good one for the team. That'll be a long one. JB, why haven't you gotten a C8 yet? Because you guys only pay me $10 a month, man. That's why, brother. No, I'm playing. First things first, man. Right, as you guys have seen, things can change in the market quick. You know, and at the end of the day, trading is responsible for vast majority of my living expenses, and is going to be, you know, for the remainder of my life, you know, until this group blows up. So for me, I'm just playing it safe, man, playing it smart, right? You know, another profit is never guaranteed. I'm kind of taking that first things first mentality, put money aside, make sure things are good, right? Make sure if I couldn't trade for, you know, a year or two, I'd be okay. You know, got a house in the near future, things like that. But all I'll say is 6 to 12 months, you'll see something. You'll see something. That's all I'll say as far as that goes. And then my man Mike, do you have any key levels marked up on your ad or tick? No, I don't. So for me, I don't know about Chandler or those guys, but with ad and tick, I just take that on a day-to-day basis, right? Session to session. So I'll open up a 15-minute chart, and, you know, and whatever it's doing that day is kind of what's relevant to me, more so than, you know, trying to trade it technically or key levels. You know, keep in mind, ad and tick don't necessarily move like an equity. So I just kind of look at it on a day-to-day basis. But that is it for the questions, guys. Quick 20-minute video, not too bad. I appreciate the questions. Alma, like I said, keep an eye on the members area tonight for a video on how to prep your charts. For those of you guys asking about journaling, you can check out the daily report card as well as the video that I'm going to post down here in a few minutes as well. I'll post this video in our Discord chat. I'll post that on the website here too in the members area. And then for those of you guys asking about option selling, you can check those strategies out right there. And for any of you guys curious about the TDG, you can check that out as well. But guys, I'm super proud of you. We kicked some serious ass last week. We're working hard, even here on the weekend. So rest up today, get some good sleep. We'll be back there bright and early tomorrow morning to kick some ass once again. Much love, guys.